Welcome to The Saval 10 Questions. Today we are meeting venture capitalist Abhay Pandey. Abhay is a general partner at A91 Partners. Prior to founding A91 Partners, Abhay was a managing director at Sequoia Capital for over a decade. At Sequoia, Abhay had partnered with passionate founders in consumer and healthcare sectors focused on few themes, including creating challenger brands in large categories, supporting superior execution capabilities in massive market opportunities, and building companies in new emerging categories. His investment track record and board positions include Vinny Cosmetics, Indigo Paints, B9 Beverages, Faces Cosmetics, PI Industries, La Renon, Koi Pharmaceuticals, Curatio Healthcares, ASG Eye Care, Office, MedGenome, etc. He currently holds a board position in Velvet Private Limited, Pushp Brand India Private Limited, and Attenberg Technologies Private Limited. Prior to Sequoia Capital, Abhay worked as an investment banker with DSP Merrill Lynch and as a management consultant at Mckinsey Co. Abhay received his postgraduate diploma in management from IIM Kolkata and Bachelor of Technology in Computer Science and Engineering from IIT Bombay. Abhay is a trustee at Ashoka University and Bhilai Education Charitable Trust. He is also an executive committee member of IVCA and serves on the FICCI committee for private equity. He also serves as an advisor to SINE at IIT Bombay. Hi, Abhay.
Hi,
Welcome to the Saval.
thank you.
So, we'll directly dive into the questions. What are some frameworks venture capitalists use to come up with their investment thesis?
At a very broad level, the investment thesis of any venture capitalist is the function of the founder and the market. And all of us are essentially looking for the intersection of a A plus founder and a A plus market. What I mean by that is every market can be divided into ABC as well as founders in terms of ABC based on the attractiveness of the market and the quality of the founder. And we all believe that when the intersection of the A plus on founder and market happens, that's the intersection point which all of us are always looking for. Now, this you can translate down to different sectors, different environments, different geographies, and then kind of narrow it down. But that's the broadest framework we're always looking for.
There's a constant debate between people in the startup world when it comes to raising money or bootstrapping their company. How should a startup decide between the two?
I'd say there are two important things to consider. First of all, what is the nature of the opportunity you're chasing? If the opportunity is very large, think of the opportunity that Amazon had at a point in time, or a Facebook had at a point in time, which was the global markets and the e-tailing market or the global advertising market, which have significantly large opportunities. Then you have no choice of chasing those opportunities by being bootstrapped. You have to raise venture capital. However, there are certain businesses which have a smaller opportunity. For example, if you're building a brand in a narrow space, you can do that without raising venture capital. So the choice is primarily a function of the nature of the opportunity that you're chasing. And the second factor that you lay behind that is what kind of person are you? Are you happy with owning a large part of a small pie, or would you rather own a small part of a very large pie? And that is the second part which determines whether you should be raising venture capital or not. You should also remember that venture capital comes with lots of conditions and somebody else interfering in your life. So that's a tertiary condition that you should apply. Can I live under the guidance, board membership of somebody else who could potentially interfere with my business, et cetera, et cetera. So those are different factors you consider.
All right. Given startups spread a wide range of sectors, how do VCs decide which sectors and startups are worth investing into?
So VCs, the primary business is to make money when there's a discontinuity in a sector or disproportionate growth in a sector. So we are always looking for areas which are growing much faster than the regular economy, because anyone can invest in the economy or an index. And therefore, at different points in time, these sectors could be different. Uh, in general, a large part of VC investments has always gone towards technology companies, because technology over the last many years and even few decades has been outpacing the growth of the general economy. Having said that, there are certain subsectors within consumer, financial services, etc., which have also grown quite well. So our job is to find those niche subsectors within a broader sector of the economy, which is poised for much higher growth over the next 5 to 10 years, which is our investment horizon. And whenever we find these opportunities in sectors, we invest in them.
What are some up and coming sectors that VCs are looking to invest in the coming years?
Sure. So if I look at India in particular, today the hot sectors that people are looking for, which have a lot of potential over the next 5 to 7 years. One, of course, India consumption-led story. As India gets into per capita of 2,000 today to 3,000 and 4,000 and 5,000, different subsectors will inflect and will grow at a disproportionate rates. For example, men's grooming was inflecting at the $1,500 per capita, air conditioning inflects at the 3,000 per capita, and so on. So you have to find sectors based on parallels from other economies as to when these sectors will go through disproportionate growth. So that consumer is one sector which will stay evergreen for the next many years. Software as a service, which is exporting software products charged as a service to the US markets, is a sector which is seeing high potential in India today. We've seen at least 10 companies over the last 5 years that have done very well, and we expect many more such companies to happen over the next few years. And the third area, which is somewhat nascent, but showing promise, is the entire area of artificial intelligence, which is replacing a lot of analytics and self-learning to help decide in multiple aspects of business. And this will also get integrated with what business analytics is and will provide disproportionate returns for investors.
This year has been massive investments in startups outside of Silicon Valley. India, in particular, has seen a record number of unicorns being minted. What is the biggest reason of this phenomenon?
So this is largely driven by expectations in the future. A lot of these companies, if you see, don't have very big numbers to show on their P&L or balance sheet, but their valuations are very high. And the reason is just expectations in the future. And these expectations are based on two parameters. One, the quality of Indian entrepreneurs is just very, very high. So if you look at the US market, there may be 250 unicorns, of which a quarter of them are founded by Indian founders, of founders of Indian origin. So that's the quality of Indian entrepreneurs. Once these founders start acting in the Indian market, you'll see a lot of high quality companies getting created here, which is what's been happening over the last few years. So quality of founders is very high. And second, as the world is progressing, we saw the first wave of unicorns happen in the US, which was right to 2000 to 2015. We saw the 2005 to 2020 phenomenon happen in China over the last 15 years. And we all believe that 2020 to 2035 may belong to India, not may, will belong to India. And therefore, a larger number of unicorns will get created here. So therefore, the market is moving towards India. The quality of Indian entrepreneurs is of the highest order. Put these two together, and it's not surprising that we are seeing many unicorns, largely based on expectations today.
How important is the age of a founder?
So views are changing on this. If you would ask the same question in 2010, most VCs would have said back founders who are less than 30 years old, because that was the age of consumer internet. A Facebook, a Google, many such companies were created by founders who were very young. And it was important to understand the mind of the consumer. And you cannot understand the mind of the consumer. You're usually younger people if you're very old. So VCs were not backing many folks who were, let's say, 40 plus, certainly not 50 plus. But that's changed in the last 5 to 10 years. And why it's changed? Because enterprise software has become a large part of VC investments. And in enterprise software, you're selling to enterprises which are run by older people. And therefore, understanding their mindset and being able to sell to them requires experience and therefore age. And therefore, a lot of founders who've been backed in the last 10 years are older. They're in their 40s and many in their 50s. And therefore, where we stand today, I would say age is not important. If you're backing a consumer internet founder, they need to be young. If you're backing a enterprise software founder, they better have some experience.
Okay. How has COVID impacted VC world? How COVID has changed your investor side?
I would say besides a few months of being at home and not traveling, it hasn't made much difference to how we think about life and investment in the future. So I think it's a short-term blip, and in general, life is going on as normal. The small changes that are happening is a steep acceleration of digital adoption, which has happened over the last 18 months. If you look at what's happened in both the US, China, India markets, the adoption curve, which was increasing steadily, suddenly spiked up. in 2020 and in 21. And that has led to a greater focus towards digital businesses by all VCs because of increase in adoption. And therefore, all of us are more looking towards businesses that have better digital capabilities than what we were looking for maybe in 2020 or 19.
Tell us some qualities of a good VC.
Aha. I'd say, first of all, they should have a very good understanding of the area that they work in. Now, a VC is a generic term, but people work in different areas. Some people go deep into a particular sector, for example, consumer internet or enterprise software or AI, ML thing, or some people are in the entire biotechnology space and so on. You need to have a nice understanding of the space, because without that, it's very difficult to have disproportionate returns. Second, it's a people's business as well. You need to work with people who are either much younger or much older, and be able to manage how you work with them and the relationship with them. That's extremely important. And third thing is, you need to have a very, I would say, balanced mind. What I mean by that is, it's easy to get carried away uh, with the trends, to be able to keep yourselves away from what the common wisdom is, and apply your own mind and your own thoughts to your investments is extremely important. Uh, what is often said is the best investments in the VC world are made when you're feeling alone. It's very lonely when you make the decision, because if everybody can see it, it's not going to be a great outcome. So you have to be able to see something that everybody else is not seeing, and that requires a different mindset. You cannot be looking for consensus, and that is one of the most important qualities of being a VC.
I think मुझे भी बन जाना चाहिए. Anyways, moving on. So, what kind of essential qualities do you think a good entrepreneur has?
Uh, Actually, an entrepreneur has to be more of an all-rounder, a lot many qualities. I would say the most important, I'll highlight two or three of them, which are very important. Uh, First of all, of course, they need to know the subject, the area where they're operating in, but resilience, because I don't know of many founders who have not had a bad year or a bad few years, and therefore to be able to withstand that period and be resilient through that period. Second, ability to let go and allow other people to take the lead on areas where you are not the best person. So therefore, being I would say humble and modest about your own capabilities and letting others take the charge is extremely important. I think the one other very important capability is storytelling. If you have to be a good storyteller to be a good founder, because unless you're a good storyteller, it's extremely difficult to hire good people. You have to be able to paint the picture of what this company can become. And you have to paint that picture with your potential employees, your customers, your investors, and all of them. And unless you have to do a very good job and better than your competition at doing so. And that's how you attract the best talent, you attract the most amount of capital, and you get the most number of customers. So storytelling is really important. So these are some of the capabilities. There are more, but some of the most important ones are these.
All right. I think I'll take a note of it. You have to be resilient, humble, and good storyteller. So, no interview is complete without rapid fire. What is one company you passed on you wished you had invested in?
I'll give you two, Flipkart and Nika.
Oh, is it? Okay. What percentage of success in VC is luck?
Um, Less than 20%.
Acha. The most underrated skill in a leader is?
Storytelling.
Acha. Ah. One advice you would give to your younger self?
Um, Believe more in yourself to be able to take more risk and dream more.
Great. Thank you so much for sharing the insights, Abhay, and for your valuable time. Thank you. Namaskar.
My pleasure.
Dear friends, hope you have enjoyed this chat. Do subscribe to my channel and share with your friends for more exciting videos we are working on. Bye for now.